Welcome to our brand new podcast series where we immerse ourselves in the South and Southeast Asia venture landscapes. Featuring as co-host, we have Ambika from Circle Capital. And to kickstart this series, we have Bhavik, Managing Director at Carta for the APAC and MENA regions, who reveals
What I will say about Southeast Asia, which most people don't fully understand, how fragmented and how heterogeneous of a region it is.
But fragmentation is just the beginning. The numbers tell a darker story.
There's this steady degradation in VC IRRs. The median IRR of 2017 vintage is roughly 10 to 11%. And then in 21, you get to 0. And 22 and 23, you're negative.
As returns collapsed, investors quietly abandoned the Silicon Valley playbook.
You often see VCs here eventually evolving to becoming something closer to subscale private equity firm trying to make 5 to 8 positive outcomes on 20 to 25 versus saying, hey, I'm swinging for the fences.
The cost? An entire generation of fund managers.
That era of first-time fund managers that we saw in 21 and 22, they basically all failed their first fund. They're not able to raise a second fund, and it just killed this whole wave of new GPs.
On the EUVC podcast, we will find out why the investors making money in South and Southeast Asia are doing the exact opposite of what worked in Silicon Valley.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
Welcome back to the UVC podcast, where we try to champion and connect European VC. Whether you're investing, fundraising, or building the next breakout firm, this is your home, and this is the home for the conversations that move Europe's venture scene forward. Today, we're taking a rare, but in my opinion, important detour. Because if you're serious about building in Europe, you can't just ignore the rest of the world. And today, we're talking specifically about APAC and Southeast Asia, where new capital flows, regulatory shifts, and evolving VC behaviors are really shaping the landscape. To unpack it all, we're joined by Bhavik Vashi, Managing Director for APAC and the Middle East at Carta. But also for this one, we have a special host or co-host, Ambika from Circle Capital, to join us. And so, Ambika, maybe let's start with you as our special host today, and then we'll move it over to Bhavik.
Well, thanks for having me on, David. I'm really excited to be here. Not least because we finally get to showcase a little of what we've got going on in Southeast Asia, but also because we get to start bridging that gap, which I've been so keen on doing for so long. So thank you very much to Bhavik for joining us as well. I mean, he's got that combination of operational depth and regional breadth. And so there's a lot to talk about. Bhavik is helping Carta scale across Asia and the Middle East, supporting a significant number of funds in the region. So he gives them a really good bird's eye view of what's going on here. So how are GPs building? How are LPs behaving? Where are the opportunities in this region? So this conversation isn't just about comparing ecosystems. It's also about cross-pollination. So we're really excited to start talking about what Europe can learn from Southeast Asia and vice versa. When European GPs start thinking about partnerships or even just benchmarking in this very connected world, what do they start thinking about? So can't wait to dive into this conversation with you both.
Awesome. Bhavik, let's hear a bit about yourself before we dive into all of these nuances. Welcome to the show. Tell us a bit about yourself.
Yeah, no, thank you both for having me. It's great to be here. As you both said, my name is Bhavik, Managing Director for Carta across Asia Pacific as well as MENA. So pretty large geographical region with lots of interesting things that we can get into. I've been with Carta for 2.5 years now. Been in Singapore for almost a decade. So prior to Carta, I was with a company called Anaplan, B2B SaaS company. Was with them for 10 years. Saw that company from Series B all the way through to IPO, and then eventually we did a take private to a private equity firm called Thoma Bravo, which probably listeners are familiar with. And then after exiting from Anaplan, joined Carta, as I mentioned, 2.5 years ago, to build out this region, working closely with Henry, our founder.
What's your relationship with the region, right? Why did Carta think of Bhavik for this region? I'm sure there's history and background there.
Yeah, I would say Carta probably didn't think of me. I thought about Carta So I was an inbound from a Carta perspective. So I'm of Indian ethnicity origin, although I was born and raised in the US. And actually in 2016, my previous company, Anaplan, asked me to come out to Singapore. One of the founders, he framed it pretty funny. He was like, look, this company is going to be successful in the US with or without you at this point. And I think what he was trying to say is that, we had hit product market fit, things were accelerating. I don't think it was meant to be a diss, but nonetheless, I chose to take it as a compliment, because his point was, if you go out to Singapore and you start building Asia Pacific for us, it could really be the next growth vector, which is currently not happening, but you could make it happen. And I think at that point I had been with the company for 3 years, so he knew me pretty well and knew I liked to build stuff. He knew I would say yes, and so I did. And I came over to Singapore and spent from 2016 to 2022 with Anaplan building and scaling our APAC business from about 7 million ARR up to probably 70, 80 by the time I left. As I was thinking about my next adventure, as I mentioned, Anaplan got acquired by Thoma Bravo in a take private. So we were public, and then they took us private for about, I think it was 11.4 billion. I was looking out in the market, thinking about what the next opportunity would be. And I found Carta. It was pretty fledgling as a company out in this region, but I did notice that they had a few roles posted. And so I reached out to somebody who knew somebody, and eventually kind of got myself connected to the chief strategy officer, and then eventually to Henry himself. And it was perfect timing. They were figuring out what they wanted to do with this region, looking for a senior leader to help make it happen, and looked like it had a lot of growth potential.
Should we talk a bit about the Southeast Asian markets? From your perspective, you've been here 15 years. What makes this region actually different from Europe? And I know you've got a bit of experience of jumping around as well. And what's everyone missing? Because I know that's one thing that comes up in conversations a lot. Europe versus Southeast Asia. What is it? What's that?
Yeah, I will. So about 10 years. So I came in 2016. I'll just kind of caveat that. But yeah, no, Southeast Asia I've gotten to know pretty well in that decade. And it's an interesting question. Whether I don't have the best pulse on the European perspective, right? I have not spent any real time in Europe other than last week in London, but I won't count that. But what I will say about Southeast Asia, which most people don't fully understand, or maybe don't fully appreciate, I think they understand it, but they don't appreciate, is how fragmented and how heterogeneous of our region it is. I think the grouping of the region is not based on a common cultural identity, nor is it based on a common language or a common regulatory framework or anything of the normal characteristics or attributes of a region. I think the grouping is one of convenience, in that when you add these Southeast Asian countries together, with Singapore often being referred to as the hub, you get a market which has some common characteristics, and in some gives you an addressable market which is comparable to other regions that you might go to market in. And so it's almost a region of convenience from a grouping perspective, more so than it is a region which normally has a homogeneous set of attributes which make things like building and going to market and delivering in those regions somewhat easier, which I would say the US certainly represents as a single country. And I think, and you guys can correct me if I'm wrong, but the EU represents in some ways, certainly pre-Brexit, in many ways that I just think Southeast Asia doesn't, or even more so than Europe, is even more heterogeneous and different than the EU.
As an operator, Bhavik, helping scale company, Anaplan, Carta, how does this fragmentation inform you? The reason I'm asking is because Europe is also somewhat fragmented. Okay, we do have the European Union, which is trying to kind of thread everything together in a way, with sometimes some success, sometimes not really. So I think some insights also from, because you have that US perspective as well. So I do think it's quite interesting to hear how that informs you, but also how that informs you in a company that is active in private markets, specifically venture.
I think I empathize quite a bit with all the founders that we support. So those kind of familiar with Carta, we have two primary kind of audiences that we support: founders and then fund managers as well. So we kind of see both sides of the ecosystem, which is really cool. But I empathize quite a bit with the founders because as an operator myself, who's been responsible for building and scaling businesses in Asia Pac for the last decade, again, I just think people underestimate, frankly, how difficult it is and how thoughtful you need to be and how multidimensional it is. So there's an endless series of "it depends" answers, which is, frustrating probably from a soundbite perspective, but it's true. It really depends on your industry. It depends on the segment that you're targeting. It depends on the nature of the product or service, or just let's broadly call it value proposition that you're bringing to market. I think these types of multidimensional problems can often be glossed over, right? With some blanket analysis. Hey, there's a huge, things you hear all the time. Huge TAM in Southeast Asia, young population with increasing digital adoption. And, there's great macro trends that you can point to and say, oh, no, like slam dunk, what a great opportunity. And then you get into the weeds of it, right? You're trying to build payment rails in the Philippines, and their banking landscape becomes, a hindrance, or in this case, probably an enabler, versus trying to do the same thing in Malaysia. And all of a sudden you run into Islamic finance and other things that maybe you didn't think about, right? Or you think about talent and how it's spread across various different countries. I can give a million examples of how this actually manifests in real life, but that's what makes it really challenging as an operator. And so to find, really strong operators who understand that industry, understand the regions that you think you want to start in, understand the segment that you want to target. And then if your value proposition has any direct relation to the legal, tax, cloud security, other frameworks of a specific jurisdiction that doesn't really extend pan Southeast Asia or even pan regional, that can be very, very challenging. And then flipping, just to answer the second part of your question about private market lens, that's fundamentally what you're trying to underwrite as an investor. When you're trying to underwrite investments in this region, a lot of people think, okay, it's venture capital. I've heard about this thing called power law. So I'm going to try to make 20 to 25 investments, hoping that I have one or two kind of investments that return the fund. And candidly, that's just not generally how it works out in Southeast Asia, because of the way that you think about portfolio construction is fundamentally different. The way that you underwrite any single investment is very different in terms of the ultimate outcome or markup or whatever you want to think of. And then it kind of leads you down a completely different path from an investment perspective. And so you often see VCs here either initially or eventually evolve into becoming something closer to, subscale private equity firms almost, where, they're actually trying to make 5 to 8 positive outcomes on 20 to 25 versus saying, I'm swinging for the fences, hope one or two home runs and the rest could go to zero. So that's just totally different than the American, at least the VC world.
Yeah. Ambika, I need to ask you to comment as well. I cannot not hear your comment.
I'm in total agreement with everything Bhavik is saying at the moment. And I actually just wanted to ask before I throw in a comment, what I know Carta has a really unique view on, the data trends and insights. And I know you've just touched on some of that, but do you think there's anything in particular that really stands out with hard truths that you're seeing in, very specific sectors that you think is like really interesting compared to anywhere else you've seen before? I know that's kind of putting you on the spot there, but
Yeah, no, it's okay. Yeah, so look, I will again caveat and say, since I've arrived in the region, everybody from my first day has been asking, hey, when is Carta going to publish data on APAC and MENA specifically? It's a bit chicken and the egg, right? Because our ability to publish data is based on our ability to gain market share and to have the data to be able to publish in the first place. And so we have not formally gotten to a position where we publish fund performance data in this region. We work with about 80 unique GPs in the region. So we have some meaningful, I'd say, insights, but we hold a pretty high bar for before we start publishing things that trends. Our US report, for example, makes up over 2,000 GPs, just as a frame of reference. So we feel pretty confident that those are the trends. All those disclaimers being said, we are soon putting out our first ever ESOP and hiring report for APAC and MENA, which is much more on the startup side, because there we have over 1,000 customers that we support in the region. But I can share with you things I know and compare those to things that are absolutely fact from the US. So the main one that stands out is if you look at the performance by different vintage years, and I think we published this in the US, we kind of published the 25th, the 50th, the 75th, and the 90th percentiles for different vintage years. And we can look at a bunch of key metrics around that, right? I think IRR is one. It's not perfect, there's many, but IRR is one that people like to look at. And you'll notice like this steady, especially because you can discount for time there, but there's this steady degradation in VC IRRs, right? So if you start back in 2017, and this is globally, the median IRR of 2017 vintage is roughly 10 to 11%. And that slowly comes down year after year from 8% to 7%, 3%. And then in 21, you get to 0. And 22 and 23, you're negative. That's a really interesting slope of returns. And when I look at, I'll call it like anecdotally or observationally, our GPs in the region, the IRRs were not even that high to begin with, but the degradation slope has been the same. And so in many ways, the thesis for VC in this region, specifically in Southeast Asia, where a majority of our 80 GPs are today, is fundamentally challenged, if I can be as provocative to say that. Like, I do think that there is a real trade-off that you have to think about now in obviously liquidity versus returns and alpha specifically, which you're probably thinking as a venture and private equity as a piece of your overall portfolio, that that needs to be justified differently. Let me put it that way. And we've seen that compounded with longer kind of average fund lengths, right? So you normally have like the 10 plus 2. In reality, it looks more like 12 plus 3, especially when you start factoring in continuation vehicles and other means, because the rounds between the time between fundraising rounds at the startup level are taking longer at the company level, and then the opportunity and the path to exit in any form, even M&A, is taking much longer than I think, again, people may have originally underwritten, especially when they were entering venture in Southeast Asia around 2015, right? When you had the first wave of Insignia and Open Space and Monks Hill and some of these early, players in the region. And now they've been able to return, candidly, because they got in the first wave of investments and they all had some exposure to some of the successes here in the region. But bigger funds, more fund managers, more LP exposure. I don't think the market has been able to support that in recent vintages. And so actually right now, I think is an extremely interesting time, 24 now into 25, where we see virtually no new fund managers successfully raising. We see a lot of existing funds that are able to actually raise on a new fund. And we see certain, fund managers who are affiliated with another fund or another brand spin off and be able to do their own thing. But that era of first-time fund managers that we saw in 21 and 22, they basically all failed their first fund. They failed to return their first fund. They're not able to raise a second fund, and it just killed this whole wave of new GPs. And I think one of the open questions is, where are they all going to go? What are they all going to do now? How are they going to bounce back? And that's an interesting dynamic, because that was basically the first big wave for Southeast Asia. In the US, you've gone through cycles and people can survive and come out the other end and reinvent themselves. But in Southeast Asia, this was the first big wave we were seeing of these new GPs. So I don't know exactly how that's going to play out, to be honest with you.
On the back of that, one of the most interesting things I've observed, in relation to that is a lot of trend-based investing. People will focus on a particular trend that is the in thing of the moment. That's where they believe all the money is going to. And if that doesn't necessarily take off, or something happens to blow it up, they move on to the next thing. And so there's a constant cycle of just moving on to, the next most interesting thing, and not really pushing through on what you believe should return you a yield. And the other interesting thing is that one of the big questions I know I've been asked a lot here is, about unicorns. Most people are interested that if you're investing, are you going to give me, how many unicorns are you going to give me? And I think that's not necessarily, the way to go. But I think it's an interesting change in, a differentiation between other parts of the world.
Yeah, 100%. I mean, and kind of you start to tap into a different problem or reality of this market, which is generally, let's call it liquidity and exits. This is what I was saying earlier. Like, it's really hard to underwrite a VC check or as an LP to underwrite like the check in and out into a VC fund manager or even a private equity fund manager, because ultimately, how do you realize the gains? And everyone talks about the gap in growth capital, and obviously there have been some recent measures. Temasek announced a debt fund that would maybe support that. There have been other people that have been trying to come in and fill that gap, but ultimately, M&A has still been the path to exit here, statistically speaking, right? And a lot of that is led by strategic, corporate M&A, which is not a bad thing. I don't think that's like objectively a bad thing. It's just different than what you underwrote when you made the initial investment. And the public markets, one, we have this fragmentation of exchanges. It's like you can't really list in Singapore given its current construct. So you look at a Hong Kong, obviously Middle East is trying to compete with its own exchange. Australia, you can look at ASX as well, or you can try for a cross listing. We saw the wave of SPACs grab, obviously tried it. So it's like, kind of, where do you list? What is that exchange's ability to hold up that offering in a healthy way? And if you can't list, then what do you do? Or how do you exit? We see we have some pretty late stage companies that are all kind of stuck in that position right now. And so that makes it really hard. That breaks all kind of VC portfolios, to be honest with you.
I was doing some checking here, but it's not all bad news, because if I have my data correct, there's one unicorn already this year from Singapore, right? Superbase or whatever they're called. I don't know the company very well, so I'll keep from commenting. But I guess what I want to ask you, Bhavik, is you're coming across as a bit negative about the region. However, you are focused on the region, so I'm sure there's nuance to what you're saying. So I just wanted you to comment also, like, what are you seeing that's actually encouraging? Let's put it like that.
Yeah. No, it's a good point. I'm in the region, so I'm very realistic, I think, is the way I like to think about it. And I think broadly this has happened within the region, especially given the audience here that might be from outside the region. I wanted to make sure that I'm doing my part to inform, anybody who's interested in participating in this ecosystem about the reality. And I think it was Lightspeed, I think, that put out a recent report about, what it was called, but basically it was like revisiting Southeast Asia, or like, or a reality check Southeast Asia was the vibe of the report, which is, hey, in 2015, we said all these things. We said Southeast Asia was going to be a new frontier. We said this, we said that. And, it hasn't panned out to the extent that we originally thought. And here are all the things we've learned as to why. But it's still a good market. It's just different than what we originally thought. And I think that's really important. That's the way we think about it. To your point, we're expanding in the region. We landed in Singapore. I've opened new offices in Australia, in Abu Dhabi. We're looking at Hong Kong as well. So we're still fundamentally bullish on the opportunity in the region. We're just very realistic that, hey, you might have thought, at least from Carta perspective, our TAM is a direct representation of the venture and PE ecosystem, because the only companies that we can sell to are startups and fund managers. And so our TAM and our moves are generally a good lead indicator on what we think about it. And if our TAM we thought was 3 or 4 billion, maybe now it's only 1 billion, but it's still a $1 billion TAM for us as a software provider to the industry. And so that's where I think there's plenty of opportunity. You just need to be a little bit more intentional about how you pursue it. And so when you look at the different regions within this, so you have Southeast Asia, you have Australia, New Zealand, you have kind of MENA and specifically the GCC, and then you have Hong Kong as a gateway to China. This is how and then there's India. There's a big India question hanging out or representing the South Asia. You have these like 5 pretty distinct opportunities. And then I've not really included Japan and Korea that have a lot of like buyout opportunities, but not immediately like the focus for us. So we focus more on venture and kind of growth equity and then some private equity as well. But each of these individually has its own things, and then you can really focus in on that. Australia, for example, you look at the structure, you look at it structurally, and it has certain R&D grants that make it extremely beneficial for biotech and healthcare and pharma, where they're having basically their costs subsidized for a long time. And so a lot of research is happening down in Australia. And then you see talent, recycling kind of into that. Plus they've had a few exits, obviously like Canva, Xero, and Atlassian, that have motivated employees to actually want to work at startups and to participate from a ESOP and equity perspective. So these are things that are pretty unique and specific to Australia that are encouraging. And as a result, you have more B2B founders down there than you do in Southeast Asia. In Southeast Asia, of course, the success has been companies like a Grab or Lazada or Shopee and so on and so forth. So very consumer, your e-commerce, your fintech, your mobility. You could say some copycat models from the West, if you're being very honest, but that worked in the first cycle. And it established like a foundational layer of capabilities that are now available to the consumer market. And so you can see the consumer now graduating in their preferences and expectations. And so Southeast Asia, most of the innovation is still consumer. And that makes sense if you look at the dynamics. But the consumers are across very different countries. So localization is extremely important. And then anytime you're touching consumers, you tend to run into like the legislative environments a little bit more because they protect consumers and retail investors, et cetera. So that's very interesting. You go over to the GCC and there's like a whole different set of opportunities. I don't want to go one by one, but I think this is the piece to understand is that if you're coming in from the outside and you're looking at APAC, MENA, Southeast Asia as opportunities, you do have to double, triple click and understand then where do you want to focus and how does that fit into your overall portfolio, right? I think of it as like a portfolio composition thing.
I've always said this as well, just to jump in with it, to back off another one of Bhavik's thoughts. But Asia, Southeast Asia in particular, I've spent 15 years across Asia myself. So between Asia Pacific, Singapore, Hong Kong and India as well. One of the things I've learned is I think Southeast Asia, I feel, is a bit more insulated. And whilst we have been doing a lot of copycats here, we're also in this trend of now starting to build for the region. And I think that's where the real opportunity lies. It's a much higher risk proposition, but it's a very unique proposition because there's a whole set, like Bhavik has mentioned, lots of different cultures and different languages and different needs in this region. But we're weirdly insulated in a way that we need completely different products from the rest of the world. And I know for me, I say that speaking, focusing on climate, we know that this region needs very different opportunities. And we're starting to see a lot of interesting innovation in that area. And so that's what makes me particularly positive about it. There are spots of sunshine to not fear. It's not all bad.
Just to build on what both of you said, just for our listeners' benefit, if you were interested, the report Bhavik was mentioning by Lightspeed is called Southeast Asia, Resetting Expectations. I think takeaway one is the frequent comparisons between Southeast Asia and India/China are misguided, which is what Bhavik said. And then the second takeaway is thinking regional from day one is needed for large outcomes, which is what Ambika said. So I think it's kind of interesting. We'll add it to the show notes if anyone's interested in reading. And it's from September 2024. Yeah, September 24, exactly. Awesome. Just wanted to pull that in. Bhavik, you touched very briefly on two like really interesting stats, so to speak, which was number of new, or let's call emerging VCs, let's put it like that, number of emerging VCs, and obviously connected to that, capital allocators, specifically for venture, right? So LPs. I have a bunch of questions, but maybe I'll ask the most provocative one, which is, as a company building in this space, how do you navigate that? Because, a couple of years ago, I can speak for Europe. Whenever I jumped on a call, like I met 2 new emerging managers or aspiring emerging managers, let's put it like that, per day. Now less so, but I still do meet a few, which is great for Carta business, basically. When you think about that region, how are you navigating? How do you think about it?
Yeah, we love to support emerging managers. And honestly, other than generally loving the idea that, somebody can, become a fund manager with a little bit of initial capital themselves, and then usually like a good network of people that will believe in them. And 20 million bucks is enough to give you a pretty good seed fund, right? A good early stage investing fund, especially in this region with the valuations being where they are. So that's a very encouraging thing, because we think it promotes entrepreneurship, promotes innovation. But also statistically, like our data shows time and time again, I don't have the exact figures with me, but in our most recent fund benchmarking report that we put up, smaller fund managers outperform larger fund managers. So if you look at like the top decile and then top 25th percentile of funds that can return, emerging managers outperform. Now there's standard deviation, obviously, but that is where you're going to find kind of the ultimate alpha if you pick a good one. And so it's a very necessary part of the venture ecosystem, because what an emerging manager does, broad strokes, the pitch for them is they're closer to a specific niche intersection of the market than any other kind of big manager is going to be. They get in super early, generally speaking, and they have the most upside with that. And so that is probably one of the few segments in Southeast Asia where you could probably still apply, I call it adjusted power law, right? Where, and that math still makes sense for them. It's important to us as a company to figure out how we continue to promote emerging managers. And one, we do it through data, just to prove to LPs that this is a segment of managers that you want to exist and you want to support. And you can figure that out through your allocations. Because I think, especially in Asia, hopefully this isn't too provocative, a lot of the LPs will run to big names in moments of a crisis in confidence, right? They're like, oh, okay, maybe we can get into the next Lightspeed or Sequoia fund. How do we get allocation there? Or then they a lot of the LPs, especially family offices, which is one of the most common LPs that you'll see in this region, they are now looking for basically secondary exposure to Anthropic or XAI or any of these, secondaries going out. That's the kind of private market investing that they're interested in. Is like, how do I find an SPV to get allocation to one of these secondaries? And then others who may have participated with a fund manager in the past. At most, they'll say, oh, we want to do co-investments, right? We'd like to pick and choose, cherry pick. So why don't you become kind of my outsourced deal sourcer? And then I'm going to, review these deals with you, and we're going to do a co-investment basis. And we believe in capitalism and free markets, and we think these things have a way of kind of self-correcting. And so we would like to enable all of these new forms of private market exposure that ultimately LPs want by lowering administrative costs, lowering operational costs to do everything that I just mentioned. But fundamentally, we also do promote the need for that emerging manager. And so we do a lot of stuff on the education side to help these emerging managers really compete in what is a pretty difficult fundraising market for them because of the I would call it like the cultural risk preferences of the region. But Ambika, I'd be very curious to your thoughts on this one.
In interest of full disclosure, we are a Carta supported emerging fund manager, and it's actually been great having some of their data to take back to our LPs as well. We have found, LPs in the region are, exactly like you said, very risk averse. It is a high risk market, and they would prefer to go to vetted names. And so we have found sort of more success out of this region, to be quite honest. I still think that, as the data rolls in, and, I think there's some changes that will be coming up. And especially with current market conditions the way they are, I think we're going to start seeing money shifting back to this region in a bigger way, which I think will be interesting.
I like what you said a lot, Bhavik. There's actually a really interesting podcast by, not us, unfortunately, but with Ben Horowitz around the VC model. And I'm trying to paraphrase based on my memory, but it was something around the lines of, the models that excite me. This is Ben speaking, right? That excite me looking forward are definitely these kind of more specialized, what we call emerging managers, not necessarily small, but specialized and sector focused, because that's where he does see a future for it. So I think it's also, it feeds into your narrative as well. You're coming from a data perspective, he's coming from a practitioner perspective, but together they actually complement each other a lot. So I'll also add that if anyone wants to listen to it on the show notes. Bhavik, typical question we ask on all our shows. What's a belief you've held strongly that you've had to unlearn? And if possible, let's try to focus on the region here, Southeast Asia, APAC maybe. And I don't know if you care to comment specifically on private markets or not. I'll leave that completely up to you. But I'd love to hear a bit what has been a belief change you've had recently.
I was probably guilty of this. The same one that it's probably why I'm warning people to it now, because I've gone through this learning process is this idea that just underestimating like the fact that this is not, in my opinion, it's more a collective of countries versus a region. Like I can't emphasize it enough. That was my main learning. From my own personal perspective as an operator who was come in and tasked to build a business, find new market opportunities, find new customers, go to market across, we had a team going to market in Japan and a team going to market in India, in Australia and Singapore. And I promise you, they felt like 4 different companies. And so, and I didn't expect that coming in. I was like, I was from San Francisco. I was like, I'm going to lead the APAC business. Yeah, APAC. That's the region. And it couldn't be farther from the truth. So that was probably the one. The second, which I probably haven't talked about as much, is also just this idea that the East, again, this is my impression, may not be everyone's, but there was this feeling that the East emulates the West. It was almost like nobody had to talk about it because it was well known that like, oh, okay, everybody wants to be like the West. That's the North Star. And like everybody else is just going to try to do that. I understand in certain elements and in certain ways that might be true, but the more time I've spent in the region, and also the world has shifted in 10 years. So there's probably a combination of factors here. That is not that true anymore. I think you should approach every conversation, every interaction with pretty first principled view about whether or not that is actually true in the case of the conversation you're having. I think that's actually great. I think that's a great reframing for the region across all of the different sub-regions that I mentioned: India, Hong Kong, Singapore, Southeast Asia, Middle East, Australia, because I think it leads to better, again, sorry to reuse the term, but just first principles thinking. Like, I think there was some early success. Okay, we copy some business models, boom, roll them out in Southeast Asia, boom, we've got like great startups, and now we're going to continue to emulate. I think we've hit a point where that's not going to work anymore. And you're going to take a much more localized, much more nuanced, much more bottoms up approach to innovation. And I think that's a good thing. And I think that we'll start to see some companies compete on the global scale eventually that come from the region. I'll give the most basic example. The mobile payments infrastructure in Asia is far beyond anything I've experienced in the West, right? And that was born out of a local necessity of how people manage and move money, and a completely disparate banking landscape and cross-border and all that. Like we as in the region kind of worked on solving a problem that frankly the US didn't have. So I think any way you can invert it and say, hey, all these things that I said are challenging or obstacles are also opportunities always. And if you invert those and solve those, they do eventually export as well. And that, I think, is the big opportunity for this region. And those can be your unicorns. I think you can underwrite those, because then from a scale perspective, it's like, hey, you're not just solving for a country or even the region. You could be solving for at least multi-region, if not the world. You could take concepts that work in emerging Southeast Asia and take them to emerging Middle East or emerging Africa, or even, parts of emerging Europe. Like there is some commonality, some pattern recognition, some frameworks that you can reuse. Airwallex is a great example that's come out of APAC. Look at them now on the global scale. And we have other companies attempting to do the same. And so, that's another one for me. We're just really like inverting how you think about innovation. Instead of top-down kind of copycat, just take it bottoms up and be a real innovator.
Maybe I can also add something here as well. And I personally noticed, and you've probably seen this as well, Bhavik, that relationships are really important here. and more so than I would say in the Western world. In the Western world, you sort of see things built around, the documentation and the paper and the contract is everything. Here, it's really the relationship that you build. Paperwork is just, it's by the way. Kind of an interesting belief that I had to change as well when I came here. But to that end, I mean, you manage totally different markets, like you've told us repeatedly. What philosophies or habits do you sort of withhold to try and manage working and, in these different markets and environments?
Well, that's a great one. A simple one, but great one. Relation, and that's true in all the markets I mentioned. To varying degrees, like you can say, okay, one's a 10, one's an 8, one's a 6 on the relationship scale, right? But all the regions, Hong Kong, again, the ones I've mentioned, they are all heavily relationship. The process to build relationships looks super different. Each of the 5, like they're all important, but how you build them is completely different. And I think that's been my learning is, I think the most efficient thing that any American company, certainly, but every global company tries to do is this like hub and spoke approach, right? So they're like, okay, we want to minimize operational investment and risk. So we're going to set up this like hub in Singapore or Hong Kong, traditionally speaking, and these days more often Singapore, and like access Asia that way. I just think it's the wrong way. If you're really serious about it, I think the first thing you need to do is get as many nodes, spokes out there as possible and actually keep your hub lean. And it's annoying from a G&A perspective and from various other things, but that I think is the job of a Asia Pacific business leader or a CEO if you're a founder here, is to convince everybody that that's worth doing, because it's all in the spokes, not in the hub. And that to me is my guiding principle, whether it relates to org design, go-to-market strategy, partnerships, pricing, even customer service models. Like once you reframe it around that and say, okay, I'm actually building for 5 completely different countries or regions or whatever, and then work your way backward and you use the hub as minimally as possible to create some efficiency and scale. In many ways, it's like what I think the founding fathers intended for the States, where it was really meant to be power to the States and as thin of a federal government as you can allow to avoid obviously what we had come out of, which is the monarchy. In a weird way, I think that's like the same principle, just operationally, when you're trying to deal with a diverse region, which, as I keep saying, is not really a region, it's a collective of countries. And so, operate it that way. But it's hard. It's not the convenient thing to do.
It's not really the topic of today, but I think we have some time, so I'd love to just ask you to briefly touch upon it. Obviously, we're talking about Southeast Asia mostly, but there's also Middle East here as a region that you understand. And it's also a region that we've covered a bit on the pod, and we know that our listeners care about. So that's why I'm bringing it up. How would you nuance everything we've said and discussed so far when talking about the Middle East specifically?
It's really interesting, right? Because in Carta, we cover territorially, we cover MENA, Middle East and North Africa out of me, meaning out of our Asia side. And I think traditionally you've seen companies operate with this America, APAC, and EMEA model, right? So it's Europe, Middle East, and Africa. I know it's simple, but I think that shift is worth calling out. That historically, this is a bad idea if you study history, to just arbitrarily draw lines and group things in where the West finds them most convenient. That has led to most of our major world conflicts. But Middle East and Africa feel like they were like that. It was like, oh, Europe and Middle East, Africa. Okay. Right. And just kind of, let's just put that there. I don't know that that was well thought through. If you think about like, why do you organize a business in certain ways? Are there common characteristics or attributes of those particular regions and markets that then you want to put a specific type of business leader or design on top of to try to maximize? I see more commonality, frankly, in the Middle East and Southeast Asia than I do in Middle East and Europe. And people will disagree, like, because don't get me wrong, people in the Middle East, they're in Europe for the summer, 100%. Like we're in April, coming June, everybody will be flying to Europe for the summer. It's excruciatingly hot in the Middle East. No one is there. So they have this affinity, perhaps culturally and other ways to Europe. But if you think about like the business model and where each of these different countries is in their development cycle, the challenges they face, especially in private markets and venture and private equity, you could find a lot in common. And these are not perfect, but if you look at the UAE and Singapore, right, they are fundamentally trying to do something very, very similar, operating off of. So the UAE's now ballooned up to 10 million people, but it was not 7 million people very short time ago, of which 90% are expats. So there's only 1 million Emiratis and 9 million expats in the UAE. They're trying to set themselves up to be a financial hub and a gateway to the GCC, very similar to what Singapore is trying to do with Southeast Asia. And then you've got Saudi Arabia, which has this huge domestic opportunity, about 35 million plus people domestically, with real consumer challenges that, again, if you must draw a parallel, you could look at like in Indonesia or something like that, which is just next to Singapore. Now, obviously, there are other differences to think through. And then you've got this other collection of countries that are competing, Qatar, Jordan, Bahrain, Egypt. Like you can go across the region and you can say, actually, there's a group of companies, and the GCC is a concept very similar to ASEAN, where they're finding the power in numbers, and it makes sense for each of the individually participating members to be a part of the collective right now. And so, I think that's a big change in the Middle East and how we're thinking about it. How is it, different? Is they hold, I think, they're much more receptive in general, I think, to Western culture, technology, and they seem much more globalized in their perspective. I think they're willing to take whatever works from wherever it works. So they'll look at Europe for certain elements. They'll look at Asia for other elements. They're really kind of neutral in that sense of where they're going to take inspiration from, with this strong point of view of where they want to be. But from a policy perspective, they have more in common, again, with the East and the West. I mean, you have, obviously, in certain countries, you have monarchs that can implement a 50-year vision for their country. And that kind of political stability, right or wrong, is extremely efficient for markets because you can really execute over it. Now, Singapore is not a monarchy, of course, but it has had a single party ruling the term of its democracy, which gives it that same ability to execute multi-year long-term strategies. So I think of both of these places as being able to operate like companies with a CEO, where you don't have to re-elect the CEO every 3 years. Imagine how inefficient that would be for a company. And obviously in the West, you deal with that, and policy drives so much of the innovation economy as well. And so, yeah, there's really interesting things going on in the Middle East. I can talk about it for a long time. That's probably a fairly unstructured answer, but I think there's, again, just it's a different beast. So make sure that you treat it as such.
Yeah, this would be the time if we had another hour, we'd start talking about politics and policy.
Yeah. I'm always careful because, like, they always say, like, don't talk about politics, but I'm like, you can't conduct business decoupled from policy. And policy is politics and government. So these things are intrinsically linked. You can't avoid
the point being made, which, by the way, I strongly agree with, is not that it ideologically or from a values perspective, X is right and Y is wrong. It's
Correct.
just, well, this system has this impact, which in some ways is good, in some ways is bad, right? And it is what it is, right? And I think, my surprise, I've spent quite some time in the Middle East. My surprise has been like how quickly things move and how it's easier to do business there, and things like, that, and it comes back to what you're saying, Bhavik, of, it's quite easy, inverted commas here, quite easy to deploy long-term vision at the government level, and then policies and so on, and that impacts, in our case, private markets in an interesting way. I think that's the point. So I agree with that, but let's leave it at that. Let's not go into politics and so on. Ambika, do you have any final questions or comments that you'd like to share?
I think it's been a really interesting conversation, and super grateful to both of you, because I think I've learned so much as well here. But it is interesting when you start thinking about how we segment out the regions. And just coming back to that idea of cross-pollination, it just starts, the wheels turning, where how do we start thinking of, being more interconnected and what works and what doesn't and how does it work and how do we pull together? So it's my thought there.
Yeah, I mean, I would just add, like, on that point, it really is an interesting opportunity for Southeast Asia, also for Europe. So these are like the two kind of main topics we've spoken about, and the Middle East is obviously right in the middle, and it has elements that it can take from both sides. So I think Southeast Asia really represents a lot from, the opportunity perspective for the Middle East and how it thinks about like the underlying companies and how to foster that ecosystem. And then European governance is something that I think once this works, so I totally agree with their policy of like, first you grow, right? Attract fund managers, attract companies, bring that diversification of the economy, which is the phase they're in, and it makes total sense. And it's great because they're willing to partner with people like Carta to say, hey, why don't you get a head start on the governance stuff? Like, be in the region, start making sure it's right from day one. But eventually, I think the one thing Europeans do well, maybe too much in certain instances, but certainly well, is governance and regulation. And so, like, you can kind of look at which concepts from each side are going to ultimately, hopefully, if we do it right, make it the best of both worlds, which would be great.
Bhavik, final question. What's the last book you read that truly inspired you?
So I joked beforehand, I don't read a ton, I'll be honest. I'm not a big book reader, unlike my wife. But the last book I read, which is going to therefore be the most influential book, is I think the title is What You Do Is Who You Are by Ben Horowitz. And it's a book effectively about culture. And I think that was particularly influential on me, one, as a senior leader who's managing large organizations across, as we've talked about in spades, multiple different regions and cultures, but also if you've read anything from Ben Horowitz, like, he's pretty down to earth and pretty straight to the point about his writing style. And so just this idea of there is no playbook, there's no leadership philosophy or anything about how to build culture and establish culture. Like, it's pretty simple. Like, the things you do is going to become the culture of the company if you're a leader. And he goes down to some pretty extreme examples of like setting, rules that seem extreme, that make everybody ask, why is that a rule? Because that makes it memorable, right? So, it could be something crazy like, we always eat ice creams on Tuesday. And everyone's like, well, that's kind of an arbitrary, weird rule. But guess what? Every single person that joins your company is going to ask the question, like, why do we always eat ice cream on Tuesdays? And then if there's like some, very compelling story behind that people remember, then that is going to become foundational part of your culture, because it's that thing that everybody remembers, right? And similarly, like, just the way that you operate and the way that, there's this other concept about, what you tolerate is like the form of performance that you let the rest of your company deteriorate to. So this concept of tolerance and, advising that it's okay to be tolerant, but just know that that is establishing the lowest bar to which eventually everything will deteriorate to. And so trying to figure out there's a bunch of things in there that really resonated with me. And it's probably like one of the books that I can like just go back and reference every once in a while if I'm dealing with something.
Bhavik, thank you for joining us on the show. Ambika, thank you for co-hosting this one with me. It was great fun. If you're listening in and you enjoyed the show, remember to go on EU.VC, drop us a review wherever you listen to your podcast. And if you enjoyed this small detour, which I thought was super interesting, of covering other regions of the world, do give us feedback so we know you like it. Do ask us to cover specific subtopics. We'd love to hear from you. Both of you, appreciate it.
Thank you so much.
Thank you very much. Bye.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.